This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And it is nice to see a string of positive closes, something we have not seen for a very long time in some of these markets, more specifically the corn and the beans. I want to touch first on the corn market. 360 is a big pivot point for us. We've managed to stabilize above this, but need to really see a little bit more conviction into the end of the week to close out above this. If we can do that, I think that encourages maybe some additional short covering, but is also a sign that the water is warm and logs can get back in the pool. As far as the resistance goes, there's really not a whole lot until that 380 level. So from a risk reward perspective, we think the near term, the buyers have a little bit of an advantage here, but the bottom side risk is a break and close back below that 360 level. If that were to happen, I wouldn't be surprised to see buyers sit on their hands again and sellers step back in and potentially test us for a retest of that psychologically significant 350 level. Now, moving over to the soybeans. Soybeans have tried to get a little bit of a relief rally, have gotten some consecutive closes in the green, which is nice to see, but it is go time. We need to see more than a relief rally here. Relief rallies, it looks like it's going to get sold into, so we need to get a close back above technical resistance. The pivot pocket for us for this November contract, 850 to 855. If we can get a conviction close out above this to wrap up the week, potentially we see some short covering and see maybe a run towards that $9 handle, but it's going to take a little bit more conviction from the buyers to wrap up the week. On the bottom side, a break and close back below that 850 level opens the door and risks down to 825, which is near the recent lows, but a trend line going all the way back to 2002. So that's going to be something to keep an eye on. Wrapping things up with the wheat market. Wheat has found some ground, trying to stabilize above this $5 handle. In the longer term, we are bearish this market and think there's a lot of technical headwind up towards 510.5 to 513. Here you have trendline resistance from May, have the 50 and 100-day moving average, as well as a key retracement on the year. This would be a pocket where we'd like to get aggressive on the sell side. A break and close back below $5 gives us a retest of the recent lows near that 470 level, but ultimately I wouldn't be surprised to see a retest of contract lows in December near that 450 handle before it's all said and done. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.